Hey guys, what's going on? Welcome back to another thrilling episode of my Robinhood portfolio. Thrilling today because I'm actually on during an active trading session. You can see up top, made a little bit of money today, $38, sitting about 66.60. And over the last week, I've been regaining some of those losses I had incurred, with the Portola and Pfizer play. Um, Probably have seen that in my last couple videos. I'm not going to dwell on that today. But what I would like to do is talk about how you can buy a stock here on Robinhood. I don't think I've went through and showed you guys that. So you can see up top here, I have a graph of my overall uh, return. Below that, the current stock holdings, Below that, a few stocks I'm watching. One stock I kind of want to go through and show you guys how to buy a stock is this Smith Industry stock. It's a cheap stock. It's seen better days. It's kind of been trending down over the last 5 years, over the last year as well. Over the last week and today, it's been holding steady. It's a cheap stock, so I thought I'd go through, just buy a share during a live active trading session. You can see here, it doesn't have a dividend yield, but again, I don't really care about that. I just want to go through buy a cheap stock to show you guys how this app works. So if you click on buy, you'll see up in the top right hand corner different order types that can be placed. Market order, limit, stop loss, and stop limit. So let's kind of go through and check out what these are. So a market order, if you wanted to put a market order in, you'd simply specify how many shares you'd like to buy. For example, one. And then you would simply just go ahead and swipe up to buy that particular stock. So whatever current price that stock is what you'd buy it for. Alternatively, let's go back into the order types. You can select a limit order. This would specify the maximum amount of money you'd want to spend on a particular stock. So for example, this stock is trading at 161. Let's say I didn't want to buy it unless it got to 150. Well, I'd simply put in 1.50. And then you could specify whether that trade is good for just today or never expires. Let's just kind of go never expires. Again, put in the price that you would be, or the number of shares, you've already put in the price, number of shares, and then you'd simply swipe up again to place that particular order. So you would not buy that stock unless it hit 150. You can also put a stop loss order in. This is a little bit more sophisticated. So the bottom two, stop loss and stop limit, these are for more actively traded stocks that are a little bit more volatile, going up and down, and you might not have the time to sit in front of the monitor and watch these stocks going up and down. So you could put a stop loss order in, which would essentially convert a price that you specify into a market order once it hits that. So let's say this particular stock at 161, you don't want to buy that until it starts moving. But again, you don't have time to continually watch this throughout the day. So you can put it in an order, let's say 1.70. So if that stock started moving up, if it hit 1.70, you might expect that to continue trending up. So you'd want to buy it at that point. Simply put that price in. Again, we'll just say it never expires. How many shares? And then you'd simply swipe up to go ahead and buy that stock. So again, that would be wanting to buy that stock if it was moving, and you wanted to try to catch the end of that move or buy it when it's going up. Alternatively, you can do a little bit more sophisticated method here, the stop price, which is essentially a limit price and with the stop price as well. So again, this is for a stock that would be actively moving throughout the day. You wouldn't have time to necessarily watch it. So you can first put in a stop price. A stock stop price. So for example, let's say this one, 1.61. Let's say you wanted to put in a stop price at 1.70. So if that were triggered, then you would do a limit price. And let's say that limit price you would want to do, I don't know, 1.75. You put that in. Again, never expires, how many shares you would want, and then you'd simply swipe up. So essentially what you'd be doing is trying to catch that stock when it's coming down. So that 1.61, the current price, if it went up to 1.70, you'd put a limit price in, but that'd be moving quite rapidly. So maybe it went up from 1.61 to 2 right off the bat. Well, it reached your threshold of 1.70. Now you have a limit order in, And once that trends back down to 1.75, you'd buy that stock. So again, that's a very sophisticated and complicated buying order. What I typically do is just buy a market or limit order. So let's just do a market order for this particular stock. It's currently at 1.61. I'll just buy one share of that. Again, you simply swipe up to make that trade. Now that order has been sent. Since it's a market price, that should be bought fairly quickly here. And again, it's been bought. So I bought that at 1.69. It was moving up a bit there. And now it's 1.61. So I lost 8 cents. So you can see how the advantages of putting in the limit order. I could have put the limit order in for 1.61 and I would not have bought that stock unless it got back down to 1.61. And again, there's the more sophisticated buying orders as well, stop loss, stop limit. I typically don't use those. I typically use the limit order. And even when I think a stock is fairly inactive, I still do the limit order. The market order, like this one here, looked like it was 1.61. I put the order in and it still bought it for 1.69. So if you're doing a much larger order, a couple $1,000 order, you wouldn't want to have that loss incurred like that. So I typically do limit orders, but again, market orders, limit orders are the ones I typically do. So yeah, that's how you do a stock. So now I have that added to my portfolio. If I wanted to sell that stock, it'd be the same kind of deal. I simply put sell. There's a couple different types there. Essentially the same, only now you're selling the particular stock, moving in the opposite direction. So again, yeah, I hope that helped you guys out a bit. I know that was pretty brief, and I went through that pretty quickly, but you get the idea. Once you make a couple trades, it's pretty straightforward. So yeah, I just wanted to check in, up a little bit here today. Looks like only $34 now, so sitting about 66.56. I'm getting back some of those losses I've incurred over the last week, so not looking too bad today. So yeah, as always, subscribe, give me a comment, give me a thumbs up, let me know how I'm doing with my portfolio. If you have any advice, let me know. That's what I'm posting these videos for. It's fun, but also I want to get some advice. I'm a new investor. I always like opinions of others. If you have some good stocks out there, let me know. If it looks good, I'll definitely buy a stock or two. I've done that in the past. I think I've actually bought all stocks that have been suggested so far. So I definitely look over your comments, and I definitely follow up. So again, subscribe, leave me a comment, give me a thumbs up, and I'll see you guys next time. Bye-bye now.